I just bought a 24 unit brick apartment building in Chicago's South Shore, and in this video, I'm gonna break down everything that happened to get the deal, to find the deal, to get the financing to close on it, and now the plan after closing. So I'm gonna break down everything for you step by step. If you don't know who I am, my name is Antoine Martel. I've been investing in real estate for the last 10 years. I've bought and sold over 1,000 units, both multifamily and single family. And in this video, I'm gonna break down everything about this deal, talk about the location, talk about the asset, the plan, the CapEx, capital stack, why we like it, the risks, what's next, and then we'll wrap up the video. Now, if you are an accredited investor, which means you make over 200,000 bucks a year, 300,000 if you're married, or you have $1 million net worth, click the link at the top of the description. So click that link down below and grab my investor starter kit. This is gonna go over a couple recent deal decks, our 401k real estate guide, and a live deal that you can invest in right now because we are actively raising for a deal. So go ahead, click that link, top of the description, just some more free value for you. Now, let's go over the asset. So quick snapshot about this building. It's on 74th Place in Chicago. It's built in 1926. Unit mix is 12 one beds and 12 two beds. Now, the condition of the property was in good shape. So it had already like a great porch system, newer hot water tanks, and a modern boiler. So everything was kind of good and updated and kind of ready to rumble in terms of like big ticket items. The interiors of the units needed some updating. They needed to get higher rents. They needed to put in more government programs, government agency programs to get higher rents. And they were just mostly doing market rate tenants. In these neighborhoods, what we see is that we like to do more subsidized rents and more affordable housing. It just gets us way higher rents. And also most of our rent roll then is guaranteed. The property is already fully occupied, 92%. We bought it for 1.6 million bucks for 24 units, so that's pretty good. And then in-place average rents for a one bed were around 1,000 bucks and 1,200 for a two bedroom. I'm gonna tell you a little bit about what the market rents are here in a little bit. So this property sits just below Jackson Park Highlands, which has like $1 million properties, and minutes to Jackson Park, University of Chicago, Whole Foods, and the Obama campus. Obama is also building his own like little library around this area too, which is pretty sweet. And there's a lot of new construction happening. There's a brand new Starbucks around the corner too, which is pretty sweet. Brand new Church's Chicken around the corner too. So there's lots of stuff happening in this part of town. South Shore has real development tailwinds, including projects like Thrive Exchange and a planned 22-story Exchange Tower on Exchange Avenue. I think this one is only like $10-20 million, but it's affordable housing project that they're building. If it's not this, there's another similar project going on in this neighborhood in South Shore, which is a neighborhood I really, really like. It's like a couple $2 billion like chip plant that they're gonna go ahead and like build like computer chips and all that kind of stuff. So pretty sweet, lots of stuff happening in the area. In terms of the plan, there's kind of 3 value add levers that we're gonna implement on this deal. So number 1, we're gonna increase our under market rents to today's levels. So we should be getting $1,200 for the one bed, $1,400 for two, and then $1,550 for a three bed. Look at what they're at. They're at $1,000 for a one bed and $1,200 for a two. So they're $200 per month across the board low in rent. Then what we do for all of our projects is we include an ASAP program. So we keep 20% of the units affordable, which is less than 60% of AMI. I can make a whole other video talking about what AMI is, but AMI is the average median income of the city of Chicago. So we're gonna complete our rehab and then we qualify for a 10-year reduced assessment. So what this means is that pretty much your property taxes go down by 30 to 40%, and then they lock in, they stay there for the next 10 years. And then you can get another renewal, you can get a max of 3. So it's like 30 years where these property taxes are gonna be locked in. And this is a huge swing factor for net income. It means we're gonna have more net income going towards the property, which means the property is gonna be more valuable. Third, and most important, we're putting in an amazing property management company. We work with them on other projects that we're buying, and we're using South Chicago team that already oversees 4,500 units and focuses on institutional processes. They have been managing in this market, in this neighborhood for 30 years. They're not going anywhere. We're buying another building from the owners right now. We've built a relationship with the owners of this property management company. So things are going well in terms of using this local property management company, and they're pretty cheap. I think they charge around like 6% of rent collected. So CapEx wise, our total renovation cost is around 250,000 bucks. We're doing $120,000 for interior renovations, 55 for exterior, and 72 for turnover reserves. So we just like to have some cash in the bank when we close. We like to spend some money on the interior renovations to get the $200 more in rent. And then we like to do some exterior stuff. So there's like some roofs, some vines, different things like that that have to be kind of taken care of on that property. Next, income step up. So the current gross rent is $2,600, but with our renovations, we should get to 33, which is 60 grand a year once it's stabilized. So that's pretty amazing. Pretty much the gross rents are $26K per month right now. We're gonna make them $33,000 a month. So NOI, net operating income on an annual basis, is over $60,000. Then you could take $60,000 divided by the cap rate in the area to get our increase in value. So pretty much you take the NOI, this is just the cap rate equation. So you take the NOI, the going cap rate in the area is 8.5%. You want it prettier? Okay, cool. 8.5%. So that's $700,000 in value created. For a $250,000 reno to make $700,000 in value. Pretty sweet, right? Like that's a huge ROI. It's a 2.8x increase in money. 280% return on your money within 12, 24 months. So pretty fucking amazing. Now, let's talk about capital stack, how we kind of did this deal, look at the kind of returns. So down payment, equity needed, we needed $700,000, including CapEx and closing costs. We underwrote an exit cap of 8.5 and a 4 to 5 year hold. All the deals that we do, we're kind of seeing like a 4 to 5 year hold for all these projects, 3 to 5 year hold. Will we hold it the full 5 years? Maybe, maybe not. Will we maybe sell it early on because we want to get some cash back, want to give our investors a return? Yeah, maybe. Could we refinance in year 2 or 3? Yeah, maybe. It all depends. Like this is kind of like, you know, the stock market. Like as we go into these projects, we notice things happen, things change. Our first building we bought, we got already a tenant way higher than what we projected. Our market rents, like a couple $100 higher. And you know, that deal is doing fucking amazing. And so there's a higher probability we'll be able to refinance that deal earlier than projected. Target returns for all of our deals is 15 to 20% IRR in the base case. So we kind of have like just like a very flat line case that we kind of run as our scenario 1, with sensitivity showing values move from 7 to 10 cap. At 8.5 exit, the pro forma is around 15%. Distribution plan, we start in year 1 quarterly once property hurdles are met. We always like to do distributions as quickly as we possibly can. For LPs, we offer 2 classes, 25K, you get a 70-30 split, and then 100K, you get 80-20 split. This video isn't an offer to sell securities. Any investment will be made through offering docs. Returns are targets based on assumptions and can change. Again, we can only accept money from accredited investors, so none of this is an offer to sell securities. All of this that I'm talking about today is just for educational purposes. You can also check the description. Now, why we like this deal in 1 minute. Chicago's stabilized occupancy outperforms the national average, and South Shore benefits from University of Chicago and Jackson Park gravity. The occupancy in Chicago is unlike anything I've ever seen. I've been looking for apartments for the last 5 years. I've been buying apartment buildings for the last 10 years. I've been really trying to get heavily into a next deal over the last couple years, and it's been impossible to find anything with good vacancy. Every time my team and I go ahead and try to find the next deal, we look at the entire country. We go through the entire country, all the active listings and all the broker relationships we have, and we reach out to these folks and try to find deals. And every single time it takes us to the same exact area, same exact neighborhood. It's crazy, and it's great because we already have a realtor there. We have multiple brokers there. I'll make some other videos around like how we find deals and all that kind of stuff. Comment down below though. I would love to hear from you guys. Like, what kind of videos do you all want to see? What kind of videos would be helpful to you? So comment down below, what do you want to see next based on this video? I will actually take it and I will actually make the video. Now, the other great thing about this deal is there's multiple ways to win. So rent increases, tax reduction via ASAP, operational upgrades, and we're not relying on just one lever. We have multiple different small little levers that we can pull to increase the NOI for this deal. Downside work, if the market softens, we can still cash flow with today's rents with professional management and reduce taxes. So we're good there. There is some subsidized programs that are paying way higher than the current market rent. So we know for sure that we can increase the rents. There's a 95% confidence in working with the city that we can get the ASAP program, but we do think that we can get it. And so we don't really put that into our numbers. So with this deal, there's multiple ways to win. We have rent increases, tax reduction with ASAP, and operational upgrades. And we're not just relying on one lever. We'd like to look at multiple different things that we can do to increase the NOI for the project. Downside work, if the market softens, the property still cash flows, even with today's rents, even with current market rents going on in the area, we're still gonna be able to cash flow. A couple of risks, ASAP compliance. So obviously if we don't get ASAP, that would suck. Again, I have like a 95% confidence level that we can get the ASAP program, but you know, there is a possibility we don't. Vacancy and collections, we underwrite 10% vacancy despite historical strength to be conservative. Because the city of Chicago has like 3 to 6 months evictions, I like to have a little bit higher vacancy. That's one of the biggest things. People come to me and say, oh, I will never invest in Illinois. It's like, okay, well, if you underwrote a deal with 30% vacancy, would you invest in Illinois? Of course you would. Okay, so then we can both agree that that's about the numbers. So you just don't think that our vacancy is good enough for you to invest in the city of Chicago. That's what you're saying. You're not saying I will not invest in Chicago. There is a point in which you would invest in Chicago. Hell, there's a point I would invest in California. If cost per unit was 100K, I can do 10, 15% vacancy, I would buy in fucking California. If I can buy something at a 7 cap, 8 cap, 9 cap, I would buy in California. So I know we like to say these blanket statements of I would never invest in California. You would. Cap rate drift. We sensitize 7 to 10% exit caps and ensure the deal still works under wider exits. Construction drift, so small repeatable scopes, bedroom adds, turn standards, help control cost and speed. That's one of the risks too, is like cap rate drift and a construction drift. Again, I don't really see that happening with this deal. We're budgeting it at like an 8.5 cap. If that goes higher, that's gonna be insane. And construction, we're not doing much on the construction side of things with this project. So what's next is we're gonna start renovating the units, roll the market increases on renewals, and submit to ASAP once qualifying work is complete. The goal is to get a cleaner, safer, larger unit mix that commands market rents, then decide in 3 to 5 years whether to refinance or sell into improving cap rates. Timing is big with real estate. And so if you look at some of my case studies for buildings I've done in the past that have gone full cycle with like 200% IRRs. The reason I was able to get those was just like amazing, fantastic timing on my part, on timing on going in the market and then not being like stuck to holding onto a property forever. I'm glad I sold those properties actually. I think I made some videos in the past saying I regret selling them. Fuck no. Memphis market has taken an absolute dump and I'm glad to be investing in Chicago, you know, top 3 market in the entire country in terms of population, huge Fortune 500 company presence. The city is, you know, hard to deal with, but they know their shit and they have their shit together. There's tons of programs to get subsidized housing. They have the ASAP program. There's tons of benefits of investing in the city of Chicago. All right, cool. Thanks for staying until the end of the video. Hope you liked it. Please make sure to like and subscribe. Again, standard disclaimer, this video is not an offer to sell securities. And if you are an accredited investor, click the link down below in the description. I have a little gift for you, and that gift is this, my investor starter kit. So you get a couple recent deal decks, 401k real estate investor guide, and a live deal that you can invest in right now. So if you want to invest in real estate, buy apartment buildings just like this one with me, and you are an accredited investor, click the link down below, top of the description, and I'll see you on the next one.